Now, if we look at now, what we can do here is just put a, okay, here's your 200 EMA. So the 200 EMA is sitting is at 56.72, right? So now what we can do from the closing prices of yesterday, that is down roughly like we'll call it 4%, right? So technically, everybody right now is bullish, which makes sense because the market is trading above the 200 EMA. Market did broke below the, as you see right there, the 200 EMA managed to climb back up and then got another leg down. So then from there, we made our way back up and made a false break here on one day, backed off for 3 days, as you can see right there, because either these uh, each bar is for one day. So then we backed off, and then we just made a made a way back up. So now if we look at if we look at the wave count, the wave is the price is making higher highs and higher lows. Okay. So there's no denial that is the market is not bullish. It is absolutely 100% bullish market. Now the debate is like, if we took the initial leg down, do you call this a bear market? Bounce. Well, I don't know. I mean, you can sit and call it whatever you want to call it. But if we starting to see something like this, then yeah, then we will have our doubts. Like, okay, fine, the swings are turning directions now, and we should we should be looking something down now. But that's just not the case. What can happen, we don't know that. I understand people have opinions thinking like we just go here or we made a double top here and then, well, we don't know that. And I cannot tell nobody this because, this is the best way, the how I read price and see things is follow the swings. Okay. That's why the swings have directions. So if you notice here, what I did is I start putting ranking on it. So the swing ranking is the best way to see the price and like I let me see what I um visual, if you can visual a chart. Hang on, what am I thinking? The education part. Um, you can see like you have red bars, blue one, green, and orange, or whatever, yellow. It doesn't matter. It looks I call it orange. So what this ranking does is this information right there. So I follow 3 bar swings, right? A 3 bar swings is if you have 3 upswings, is this where the swing will turn direction. So us again, swing ranking on a 3 bar is if there's 3, 2, 1, and 0. Okay. Which is right here. So now the S&P right now sitting at what ranking? 3. So it is all scripted, right? So the scripture, the script that I wrote And the way I have everything here is that whichever direction the stock, the swing will take turn, whatever it move, it will turn its direction, it'll change color. So when you are in a rank 3, your trend is up and the swing is up. Consider as a strong uptrend. So the color is going to be green. Okay. The ranking 2 is your trend is up, but your the current swing is down. That means that the pullback in uptrend is going to be in orange. What do we see here? Orange. So we were 3 here, orange here after this third day. What we're looking for is ranking 2. If the stock is going to be an uptrend, is going to be on a ranking 3, meaning is going to be in a green bars. And then it's going to be any sort of a pullback is going to come into the stock. It's where is how the ranking works is when the pullback is going to come is going to be in orange. So when it's going to go in orange, that's the pullback that you're looking to buy. And then the ranking will drop to 2, to this level. And then what happens is going to go right back to 3, green, because we're looking for what? That we're looking for a higher low, and then we're looking for another higher high. On the way down, ranking 1, trend is down, the current swing is up. So the blue one works with red, like this. Okay, you see right there, the ranking dropped, right? Went all the way back to 0, to this number. Trend is down, swing is down. It's a downtrend confirmed, is red. So the red gives you the bounce in ranking 1, which is right here. And then they're considered as a counter trend rally. The counter trend, which is a bearish bounce, is going to be in blue. The blue will turn right back again into red again because there's a downtrend. You see, up, up, down, down. So you have up, up, up and down, 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 and up. It's an opposite. I think it's a really good way to look at a chart. I don't have to do anything. I just sit and watch, and the colors will tell me because it's working based on those swings. Where we at, and is it a time to buy a pullback? That's where we run our fibs. Okay, now we're into a ranking 2 in orange. That's where we buy our pullback, and then we'll wait for this ranking to go up in 3, turns right back into ranking 3. If the ranking from 3 drops to right here, 3 to 1, 0, sorry, sees all red, that's it. That's a downtrend. Well, we don't know that is the market is going to pull back this much or how much is going to go down. That is relevant. I want to look at a chart is if the bar turns from green, meaning the ranking goes from 3, it's not going to go to 4. There's no number here for 4 or 5 or 6. It just go, the max is 3. It goes back to 2. It comes down to 2 and goes right back up to 2, if that's how the uptrend goes. So the uptrend is this. The downtrend is this. So our pullback on the uptrend is in orange. And if you're bearish and is ranking 0, your pullback is in blue. Now it can change it now these are all based on the direction of the swing and how the swings are playing out. So yeah, I'm kind of bored of kind of looking at a simple green candles up and red candles down. Yeah, I mean, fine, you can do that, but those is the generic that the world follows the same chart, you know, you can just um I do I follow four bars, which you all know, you know, higher, lower, inside and outside bar. That's it. And that's all I want. That's all I learned. That's all I basically um you know, that's how I trade. Just to track, just to follow four bars. If the bars are neutral, which are inside, you don't have to really throw a bunch of trades on the board. Those are indecision bars, which are not making any high or low. It's just, you know, they're like bulls and bears are just, they're fighting. No decisions are getting made. So we're right here, and now we're starting a new month. Now the question is, from here to here is 4%. From here to here is 4%. Okay, you see where the market is sitting right now? So you have a 4% distance down to 200 EMA, and you're 4% off from all-time high. Okay. And at the same time, this thing is rising. Well, I don't know that where and how the last time we can, if we look here, it made a low. So every time basically that, I mean, it's how I noticed that if you look at this indicator, that every time when it comes all the way back down here, that are extremely kind of like call like an extremely oversold, um, it goes all the way back up pretty much to this level. Now, if we go back here, watch here, see it all the way back here. Same level here is all the way back here. So if this is the case, meaning that if this thing comes all the way back down, gets so much oversold, and then from there goes all the way back up here to this level. So these whatever days are coming, I think there's gonna be more chop. Okay, because this thing is rising, as you can see that. I'm watching every single day, and now it's down to 47 now. The other 2 days ago, so it was down to like 41 or 42. So it's rising. So I mean, I'm gonna watch this part, which is what I'm watching every day. And this, so this is technically right now is what it's a 3% range. Now, if you notice that with these market reacts on these tariff news based on tweet, not even nothing is official, but it just bounced right back up. So what does that tell you? That there are people who realize that this is not a bear market anymore. Of people who try to short this market, basically, which was here, as you can see what happened here. Ranking went to 0, ranking went to 1 right here. So what is that supposed to do after that? This. But then instead of this, what happened? Ranking went all the way back to 3. See, it's all green now. So this dip right there that we had last week was this. So now last 2 days, including yesterday and a day before, I mean, we had an inside week. Okay, an inside week is the last week high was this, and the last week low was this. So do you see that as in, that we didn't make a new high, and we didn't make a new low either. Okay, so it was a short week of trading. So we gapped up on Tuesday on those European tariff news. So that was the pop right there. So that's Tuesday. This is Wednesday. This is Thursday, and this is Friday. That's it. This is the 4 days. So I don't what how I see like I mean market definitely was a good close yesterday, and we're right into these green green bars, meaning that ranking 3. We're down to 2. Now we're right back in 3. Okay, so that's how the ranking works. So every time when you're gonna see this chart, which I post, because I pretty much change all my charts to um, to follow the ranking now. So I mean, the swing is the same. Like nothing has changed there. I just color them. That's all. So so we'll see. I mean, there's not much to make out of a inside week, to be honest. Um, we just have to watch this 5900, and the 5905 is where JP Morgan Chase had that collar set up as well, which is going to expire next month. So I was looking yesterday, but I didn't really price out. I'm planning to put a butterfly on S&P for next month, um, and see. But the thing is this, that I just need to play with those. I need to play with strike price just to adjust it right. Um, because the collar is, if S&P closes below 5905, they make a lot of money. Okay. So if it closes above 5900, they don't, I mean, they still make it, but they don't make as much as if the S&P closes below the 5900. Now the question is that if I center a butterfly at 5900, but then that's what I am selling to here at 5900, then I have to buy something here and I have to buy something up here. So if I'm gonna go any strike above the price, but the butterfly is not gonna be cheap to buy a call in the money. It's gonna be expensive. So if you're gonna sell two here and then you go back in the 5960th area to buy one here, this is a very short spread, right? So making that such a short spread for the whole month, you're gonna have to wait for a very long time because the implied move for the whole month for June is 250 right now, plus or minus on the option market. I was like looking at it yesterday and then I started looking at the option chain. I was like, okay, should I put it now? Should I just wait for the new month to start? Like, I was like, you know what? I'll just see. I need to play around with strike prices. Butterfly is not an easy trade to just randomly um, come up with the strike prices and just throw one on the board. That's not how it works. You have to know where if the wave count is or the swings are and to see how that thing um would if it's going to come into a play or not. The point is like if JP Morgan is looking for a close below 5900, so you can either start so you can just buy the 5900, but then you just have to see where you can sell, which is the body of the butterfly. So if you do the 5900 plus one, sell somewhere around here, and then you have to buy something one here, that 200 EMA. So I need to play around with these strike price because the way I'm looking at is, as I said, you have 4% here and you have 4% here. Okay. So the question is like because if you sell something here at 5900, you have to buy something up here. That's a problem. You know, the only other thing I would consider doing is to make one butterfly and then you just buy one diagonal at the same time, you know, meaning that you take a neutral trade if this thing goes like this. So structure something here, just go neutral, theta positive trade, meaning it's not going to have much delta into it. But at the same time, open up a diagonal if this thing is going to break out, you know? So, so your neutral butterfly is not going to reward you much, but at the same time, you have upside exposure in case the price breaks out. Well, I don't know what's going to happen in the next week or two. Nobody knows that. So we just got to have to see if these stays green and yellow, green and orange. If it turns red, so that any bounce from the red is going to be blue. And then we'll just expect another to, ranking to go back to zero. Like the same thing here. You see red, blue, red, blue, red, blue. Now, if you look at this, like how narrow this range was, 4.5% here, 3 point up here, 3.6 here, 3.3 here, 4 point, see, this is not easy to trade. This kind of, you see so many whipsaws back and forth, back and forth. But the point is that, you know, looking at a chart is as long as the price is trending above the 200 EMA, market is bullish. Now, where does these cute pullbacks happens and when they come and when they rebound? Well, that's the tough call because like if your mindset and you're like if you sitting and starting a day with thinking like, oh, today is going to be a pullback and tomorrow is going to be a pullback, that's just a very wrong approach. Because you're just trying to predict a 6.5 hour session of what is going to happen. You have a very short-term thinking. You don't just you're literally not focused on a bigger picture. I mean, yeah, I mean, pullback is gonna come. It's a part of the trend. Is Elliott tells you the same thing, so does the swing. You need the higher low. Wherever you're gonna set your high from the low, you will have the retracement, and then from here, this is what you're looking for, is to take out this high after finding support here and the higher low. Either it's a 38.2, is it a 50% retracement, is it 61.8, or it goes all the way back down to 78.6. But as long as it doesn't go below the initial low, the swing is valid. Because something is in a downtrend, right? So you want to buy the market, but at the same time you're afraid that you buying a market which is a downtrend, and you can only expect the market can only get a pullback and then it's going to go right back down, right? That's what we're looking for, red to blue back to red. Now we're looking for green to orange back to green. So where the market goes and how much it will retrace and what pullback will come and how long the pullback will stay, we don't know all of that, all of this. This is why we're only follow the direction. Swing is up, we look up. There is nothing to look down. You never ever ask me to look or run pullbacks when you have a direction that tells you up. Up, you only look up. You don't look down. When the direction turns down, then you look for retracement. Then the upside will stop. Mark the high of that and whatever the high that we have. Now we'll look for retracement because now the direction of the swing is down. So it's the same thing when I do with the wave count is when the direction of the swing turns down, I will stop looking or projecting anything to the upside. There's no point for it. It's just useless. So we'll follow the direction. That's the most important part. If the direction up here is up, is up. When we're going to have three bars to the downside is when the direction is going to turn down. Now we look for the retracement. Now we have a swing that has a direction to the downside. And then we're just, now we know that bars are turning orange. The ranking went from 3 down to 2. That's the pullback that we're looking to buy now. I hope it doesn't turn into a red is when the swing is going to turn, then is no longer valid. So you have a ranking that is working with your swing. So it's a really good way to trade, like to look at a chart and just follow the swings and follow the ranking. That's it. So just I was gonna do now you want to factor all this thing with the wave count. Here it is. I don't like this, but I'm gonna leave it. This is too big compared to this. Something is just not right. But I'm leaving it the way it is because this is the dip that we had for that 3.5%. And we're right here to the 78.6 from high to this low of this decline. Because that was 59.68 high of this wave 3. down in 4, which is 38, near 38.2 retracement. And now from here, we just rallied right back up. So from Tuesday, we gapped up. This was Friday close. We gapped up here, made our way back, and this is what we did for the last 3 days. So this is 4 days that we just had this week, and we just had an inside week. If this is all a 4, it needs to push fast because we don't. It's just getting way too big. Might have to adjust this thing. So upside is in play. I mean, have to look at this way that 3 versus 1, which is wave 1 down in 2, up in 3, is a 6,095. All-time high is 6,147. So it doesn't, I mean, it if this is 4 is already starting for the summer, then we just gotta have to move this thing here. We can do this as well. And we just have to chop around here in the 4th wave. Yeah, 4th wave here is a little tricky because we don't know which 4th is this. Is it a smaller degree 4th or is this intermediate degree 4? And this is the both ways are valid, but I'm not really. I'll I'll do the whole like whatever the best way possible. The wave con will have a look. We will follow it, but focus is on this. That's my number one focus every single day. Then I will adjust the wave count.
Can I ask you one question, Mo? Just
Yeah.
on that chart, the green four should should it typically take out the yellow four, the IV?
Oh, this 4?
Yeah, what
Oh, I
irrelevant
have
of
to.
yeah, no, just curious from an Elliott wave point of view. No, 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 not if we're in for. I don't care about that. No, no, go back to how you had it. I'm just saying, when let's say we go up and we make another high 6,100, does the pullback in green four
Yeah,
typically take out the IV of 57, 57? Is
yeah. I
that
have to. I have to run retrace. If this is
okay?
the okay, let's say right now in the perfect world, if this is plays out like this, right? Let's say we get this initial push in this 5th wave of this 3. So now we'll have a completed 1, 2, 3, 4, and 5, right?
Which would make sense because we are getting first month flows next week, right? Which is why we also probably close strong end of day.
Correct. Because if I take this by turning from orange back to ranking 3, it does make sense, or I can make the case for a push here now, right? So if that's the case, if we do make that push up here, then we will be due for this. This is coming. And the way I see it, that this 4, now you have to look at this way that this 2 right there was huge. It was not small. So this rally that we just had to the upside, it's just the third it had because it has a lot of acceleration gaps, as you can see. So this is very typical for a third wave. And this 4th is coming. Okay. Do we get a push here next week? Whatever happens, or is already started, because the debate right now on the wave count is either this 4 or this 4. that we're already in one, or now if I go back here, this suggests that yes, we should go up. At the same time, when we look down here, we're gonna stay choppy. So you see, like you have to connect, like you have to find multiple arts to line up things, thinking like, okay, yes, this has there are three different ways that tells me that yes, there is um there's more upside in play, like can come into a play. But you have a pause here, you have a very promising swing here, and you have a very promising third wave, fifth wave here. So this fourth right now, there's no point for me to make the case for this fourth, is because I don't have zero ranking. Okay. I don't have zero ranking for me to start thinking about a fourth wave. We're not there yet. So there's no point for me to run projections here, because if I will run 4 versus 2 or 4 versus 3, they'll stack like this. Now these, so then the invalidation is going to go back. There's going to be a hard invalidation right there. Okay. Now at the same time, 200 EMA is sitting at 5672. So 5672 is roughly around here, which is at 38.2. Again, this is me factoring something that the price can get up to here, because you see all the downside retracement will change. So it depends where I anchor this thing. Is it I already put it here? Then we have these retracements. Do we make a push here? You see, it's going to higher this thing goes, meaning that more room that you will have, it's going to leave you to the upside. That's what we want. We need the third to push as much as far as it can, to leave this fourth to breathe, because this fourth right there has to spend a lot of time for this entire bubble to chew time on the clock. Okay, so you have a clear this a market is in a accumulation phase, then we'll have a distribution phase. So this run that everybody's chasing, and whoever left out on it, and whoever changed their mind now because we're above the 200 EMA and they missed out on a run, now they're trying to chase this thing to see if we can get another 4% upside to all-time high, and then we just have to make a room higher as well. But you at the same time, when you're looking at this, that S&P is flat for year to date. We're not gaining anything. Market is made a century record is based on a reversal. It's not that market has gained 7% upside for the year to date. It has not. But most people they're not focused on this thing. S&P is a 0.51% year to date. First quarter 4.59, down 4.59. Now we're up 4.95, and we still have another 1 month to go. I mean, we're sitting flat. So if the market from here does manage to move back to the all-time high, so S&P gains 4%. So going up here to that top, fine, you get there, then what? You breaking out a resistance. This is where you had a massive pullback. Then you have to follow the uptrend to see if the price has to make room to the upside. then the broken resistance that you have will act as a support. It's the same thing here. You've taken out a high of the previous year. That's the high right there, low, and then you just made a room back to the upside. But going up to that top, which is fine. This is how the price do. But what I mean, you want to leave them as what, a double top? That's a different thing. It's a very shallow pullback. Now, if you go back to some of these previous years, you see like some of these years, like many years, where the year ended, and you just look at the low of the next year and then look at the upside from there. It's crazy. And I could just keep on going. This is the when the recession triggered. Look, low of the year from here to here, and 2018 got the pop down here, and then it's rallied up. The point is like when you look at chart on a bigger time frame, like look how much market used to move compared to how much it moves now. I um started back here, and look how much market used to go up. Look at these the low to high ranges. Year high right there, year low. It's when the COVID happened, and this is the 2022. You see, you can tell like how wide these ranges are now compared to those previous years. Yeah, market is definitely more news driven with more kind of like, you know, um, there's definitely more money to be made in the market because it has much bigger move because you don't have a choppy kind of like a low like a 1 standard deviation move markets, you know? So, I mean, for me to, the thing is, this is like what what can drive S&P to the all-time high? You have to ask yourself that question. Tech, right? S&P is flooded with tech. Okay. What are the top three big names? Apple, Nvidia, and Microsoft. Is the Microsoft is going to take the Qs to all-time high by itself? Well, Nvidia is flat, and this one is down almost 20%. This one doesn't have any impact on the overall market anyways. This stock is just on its own. Amazon down, Alphabet down. You see, like where do we find strength except for this? Like remove this one. Where else we can find strength? Nvidia is flat, Apple down 20%. This one is down 6.5%. This one is down 9%. So we have three against 4. It's a range bound market. And this kind of a range bound market is very difficult to trade. And a lot of people lose money trading this kind of a market. Just if this is what you want to trade, nobody can trade this. Very difficult. We don't have a line like this here. This is still green right there, as you can see. It hasn't changed color to red. And we're halfway through the year now, and we have 6 more months to go, which is a lot of time. So if the market can manage to make a move, a 4% to the all-time high is where you are. We have the liquidity sitting here. A massive stop's gonna trigger here. Okay. And then what? The word pullback is so subjective and so like that everybody wants the pullback because they miss out on a run. So when you have a pullback that most people call it as a market crash, but nobody wants to pay attention to it because everybody's so scared and sitting in fear, like day and night. It's just accounts are bleeding now because market is dropping 1,000, 1,500, close to 2,000 points. Yes, rough. I wouldn't deny it. Massive spike in volatility, and then if you want to buy some premiums or something, you're going to pay like almost 70, 80, huge IV for it. Now you're trying to make a spread, you're risking $1,000 to make 600 bucks. That's your max payout, but you're risking $1,000. That's what a massive, high implied volatility will do to premiums. Or what kind of a risk reward is that? You know, you're risking $1,000 and you have an odds to make 600 bucks. I mean, you have to be really, really desperate to trade you to make these kind of a trades and throw your money like this. It's just the best way always is to buy shares, but most people don't have enough capital to buy shares because they're damn expensive, you know, especially on the SPY and stuff, how many shares you can buy. But then when the volatility cools off, then you can buy some premiums. But you missed out buying something down here. Now you're interested in buying something here now. See a difference? So you can never perfectly time the market. The way I see the dip buying in the market should always be with shares. And then you have the dip that whatever you're planning to buy, you can pick some. That I'm giving you an example. You pick some shares here, pick some shares. You don't know this is a falling knife anyways, because sooner or later you know market is gonna find support. Market is gonna take a pause. Is gonna bounce, is gonna come right back down to retest them, whatever. But it's gonna find the floor. Market just don't stay oversold for too long. Everybody knows that. But it can stay overbought for an extended period of time. Now, if you're down here for 3 months, Every time this market, I realize, and every time I see this market comes down 3 months, it aggressively goes right back up. 3 months here, 3 months here. Look at this move. This is 9.29. We only ended with 7. I'm curious. I'm like surprised. But we had a pretty big dip though. But here we had a consistent like 6.5%, 5.5 here, 6.5, and 6.5 here. So those 3 months, which is a one full quarter, this is very, very rare for a large cap to be the S&P to be down 3 straight months in a row, made up one full quarter. Or then every time it's gonna it doesn't mean that it's not gonna happen again. Of course it will. Why? Because it happened here, it happened here, and then it can go back here. I've seen many times, not too many times, there's few times that whenever S&P is down for 3 months, it makes a monster mean reversion the next month. So just remember that. In the near future, I mean, we watch every single week. If we ever come across the selling, it could be in a very fast pace, it could be a slow drip, or whatever the case is, that if the S&P managed to drop another 3 months in a row, that third month, which when we know that we already have a lower monthly bar, okay? So you have one bar here, that's the higher bar, lower bar, another lower bar that makes it two, right? And then if the third month starts and if we break that third bar, made a new low, and if that bar turns red, it's gonna stay red. You know that. It's not gonna turn green anymore. This is the month right there that you start buying once it turns red. That's it. This will be the completion by the time the third month will end. Then you have the a new quarter will start. I mean, it depends where it happens. It could a quarter can end here, and then you have 2 months down in a first quarter. But that's not the point. The point is three lower monthly bars like this, meaning you're gonna have 3 negative months. You just this is the month right there is when you start buying. Look at this crazy move. That's what have happened. Like every oversold market has a monster mean reversion back to the upside every single time. Usually, like, okay, when the market takes a beating, you always, like everybody knows your upside always gonna grind and is always gonna be slow and steady pace, right? That's how we always says like you go up in the stairs and you're coming, but you're coming down in the elevator. So the staircase to the upside is always gonna be we'll have multiple weeks that we're gonna pull up pretty strong, and there's some dead weeks, and but it grinds and gives you shallow pullbacks, and just uptrend resumes month after month after month. But then if this happened, we didn't had a third one, so we just only had two. But the thing is, the low that we put it here with this 50, but you have to look at this. Look at the size of this 15.10 compared to all these other ones. Okay. So if we go back here, let me make this thing bigger. If we go back here, we don't have anything here in 15. This is 12.37, this is 12.13. That's it. That's pretty extreme as well. This is 30 because this was the COVID. Because when you look at RSIs and stuff on the weekly and the time frame, or they're like these are these all the RSIs were at this COVID levels right here. Because This was 30% range on that month when COVID triggered. Look at the bounce here. You have an RSI on a weekly going to what, nine, like seven, eight, nine level RSI on a weekly. What in the world do you think that you should consider buying puts when you know the RSI is sitting at 9 on S&P 500? Who makes that decision? And you think it's a smart decision? Yes, we can have another down session or two or three down because market is extremely oversold. What do you think is going to happen next? Of course, market is going to bounce. But that oversold conditions is where those premiums are, the ones are just punishing you just not to look at them, you know? Because the risk reward, I know it's horrible because I've been trying when market was taking a dip right there. How many times I tried to throw out and see like, okay, I could make some spreads here. I can go like 90 days. It was a ridiculous risk to reward ratio. At the money strike, I make a 50-point wide spread on S&P. Like I want to buy a 5200 and sell the 5250. It cost me like $1,500. The payout is like $700, $800. I was like, screw that. It's like I'm not dying to trade a 50-point spread and pay you $1,500 and you're gonna give me 700 if that goes and max out my spread over time in next 2 months. I'm just no. Even the fact that you do manage to bounce as well, where you're risking 1,500 and you then you're trying to make only $200. Options has a lot of potential because the word cheap sells, but the real value, if you look at in the market, is owning stocks, buying something, but not everybody can do it. Some can and some cannot. That's why they look at things like, yeah, option is 100 times. I can have a $30,000 account that I can grow to a $60,000 account because I have a very, very high expectations, but I don't have any experience. So does I have any knowledge. But I'll just trade for the whole year and I'll see if I will just double my account, 30 to 60 in 1 year. That I don't know how many positive months that you have to pull out of 12 to get there, but I just want to double my account. That's everybody's mindset is just double it. Huh, nothing, just keep trading every single day, throw trades, market opens, jump on them right away. Just double my account. Um, no, don't know how to make too much. Go back to a weekly time frame. I mean, now here's the interesting part. We looked at the daily chart, we looked at the hourly chart, this and this. Now look at the daily chart, the daily swing. Daily swing ranking is one. It was zero. It was three, as you see here. Turns into red. Now is in blue, which is ranking one. This is one. This is one. And this is one. So if you go back to a weekly time frame, that tells you what? Back to zero ranking. The same thing here. Red, ranking one, back to zero. It's very interesting. Now, the question is, which time frame do you follow? That's the most important part. The weekly ranking from one up to three, I mean, we need, I mean, market need a massive push. This suggests the ranking in the coming weeks goes right back to zero. The swings are up. There is no denial there. We're down 10 weeks, up 6 weeks. We were down 7 weeks, up 7 weeks. We were down 7 weeks, up 6 weeks because we ended that week on the S&P cash as an inside week, but on the Qs we made a new high. You see how messed up this market is? My market is just it's flat. It's just what I've been telling you every day. It's a flat market. But everybody have their eyes to this print. We just want to get to the all-time high. But at the same time, like you see, like this short week is just it's gonna I mean, it's okay. I mean, if we would compare 6 to 6, which is fine, but not to this one now, because this is 7 now. So we lost out one print being sideways, and this one managed to poke and made a new high. So from the highs, we're down 3.83, 4% on this one, 6.36% on this one. This one is down 16.29. This one needs to break. This is the VWAP right there. On the daily is the 200 EMA. It's very this decline has definitely put a lot of damage on charts across the board. Now, if you go back here to the daily time frame, we're down, we're up, we're down, we're up. We're just swing is up, swing is up, swing is down, swing is down. So this is gapped up, higher bar, outside bar. Outside bar, it has a high. So it does count as a bar as well. So that turns the direction of the swing back to the upside. Same thing, we're counting the inside bars as well as a part of a downswing when we're counting up the outside bars as well as a part of the calculation. Outside bar. Use if you don't it's very tricky this inside bar is. Inside bar can literally change the direction of the swing. That's what I've noted. And even they have this thing um, as an option here. Do you want to count this thing as a part of your swing or you don't, or you just ignore it? You have to. It is a bar. The indecision bar can can throw you off, because you can be wrong. Um, you think the swing is right, but at the same time, you ignoring that inside bar, and then the swing is showing you to the downside, but you're thinking like, no, it is up to the upside. It's very tricky, this inside bars. Very, very tricky. I know that. I've been dealing with this thing. It could change the direction of the swing, but you have to count it. I mean, I've talked to the guy in Optimine as well, and he said like, "Hey, do you really have to count?" He says like, "Yes." He said like, just it's like there's some people don't do it because they call it. You see how it change. See if you see like here. Let me show you. Look how the swing changes. If I take this thing in, look, it still shows a continue to the upside. Look how it changes. Why? This is the high, inside bar, lower bar, lower bar. The swing turned down. But if you don't count it, you do get the pullback and you still think like, yeah, it's up. Yeah, this thing can throw you off. Very, very, very tricky. That's why I just like look right there on Eli Lilly. The Lilly right there. This is Tuesday that we open like this. And inside day, another inside day, and then finally yesterday pop. Yeah, I only held the trade is only because of this. I was like, it ended the week with the inside bar as well, as you can see. So the it has a mean reversion, and if you look at the weekly, I mean, it's red to blue to red. You see the ranking is 0, 1, 0, 1. So the stock is not showing a very clear downtrend, but is very choppy and very range bound. And why is that? Because the stock has been up for 9 straight years. Keep that thing in mind. I think the stock just gonna go sideways this year. Has a monster run. This stock. I don't know, like if you go back here, look at this. If I put a time on it, see, it's number 9. It's crazy. Look, this is the swing, like all higher bars. Started from here. This was number 6, and then it got the lower year. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9. This is a 9. This 9 right there, because you see this is the inside bar for the year. There's still 6 more months to go. So trading an inside bar, well, you know that. So that's why the stock is very choppy right now. So now if you go back here to a weekly time frame, stock is just it's literally sideways for 6 months. It has a massive accumulation here, as you can see. It's just in a distribution phase. The stock just due for a pause. I mean, okay, it can break to a new high this year. That will be number 10. Okay, well, where are we going? It's a tough one to you. I mean, but it's a strong name in the healthcare. They, um, I don't know. I mean, it's not up to me to decide. I really think that they should kick United out of Dow 30 and put this one in there in Dow 30. I think, I don't know, they might do it. The, the United Healthcare needs to go out of the Dow 30 stock. That is that one. I'm very against stocks that performs uh, because a lot of these the companies in Dow 30s, they don't usually drops below more than 30%. Just notice that. Yeah, Nike, United Healthcare, and there's another one, Intel. They already got them out. They need to get rid of these companies. Add the see the list here. Yeah, Dow stocks here. Where's my Dow? Yeah. Yeah, these guys go to Walmart, Traveler, Sherman. Yeah, they added this one. I know. You see, United has to go. Mark is okay. Nike has to go. Yeah, nobody is dying for these fake Nikes. They're everywhere. The rest are okay. You know, they need to get rid of this to and add Eli Lilly here. That'll be good. Amgen is here. I know they're keeping a healthcare here. I don't know how they exactly like industry wise. Yeah, we have industrial. Then you have Microsoft, Caterpillar, Goldman Sachs. We have Goldman Sachs, JPM. Um, so we have two financials, software, Intel. The Intel, I mean, NVIDIA now is here, of course. NVIDIA, NVIDIA is in Dow 30 now or no? It oh, forgot. Yeah, it is. It is a Dow. That's what I realized. Like, I don't know. It is a Dow 30 stock. This one, Walmart, Apple, Amazon. Yeah, these right there. Amazon, NVIDIA, Apple, what the hell, Apple, right there, and Microsoft. Yeah, these are all Dow 30 stocks. Yeah, one by one, I mean, if I really want to make a 30 stock portfolio, buy every single one of these companies on the dips over time until you retire. Just leave it. To be honest, it's the best companies in the world. So they're Dow 30 stock portfolio. I mean, yeah, some of them are really going to outperform the benchmark and some might take a dip. Yeah, but you can't win all 30 of them anyways every single year. But if you can, in order to pull more than 20, yeah, it's a win-win for you. Just gotta balance it out. Just need to balance it out. That's all. That's if you had a huge, um, yeah, this rotation here is, yeah, this rotation is based on Dow 30, not an S&P 500. So keep that thing in mind. So like you see right there, the benchmark is Dow Jones Industrial Average. I look at rotation based on where well, we can change it to S&P. Um, but I track these Dow 30 stocks based on in the industrial average. Um, yeah, that was Lilly is crazy. The stock is, but see if we can get some. This is a week. Yeah, this is the week right there. It has the that's why I got interested in that. It had this push a week before, and we were sitting in that R the lagging quadrant. I'm looking at the swing here. I was like, we're right there at 78.6. We're basically sitting right there. I was just like, we'll see. Should give at least a pop from here, you know? Because if you break 78.6, you most likely gonna take out the low, which is this swing low right there. So this is how I have this trade working for now. And I took some off. I was like, you know what, take something off at least. I mean, next week, if we can break this 745, because our weave up is at 771 off that. I think the daily one is gonna be, yeah. Come on, buddy. Move. Really? Some of these locks are just just yeah. 764. So this is where the weave up is. So the upside from here, we had a higher bar yesterday, and the last 2 days were just the inside, two inside bars. I was watching, we ended the day here because I have the other screen. We had the same. This stock has a history of being sideways for 2 days, you know, so it happens a lot, and it's a very, see, it happens here, here, here. I've seen many times back there as well, and it breaks at the third day. Which way it breaks? Well, no, we don't know that, but it could break down like this as well. But the thing is, it's not the point. The point is, I think it's a very well, it's a good support here. I mean, looking at a mean reversion, which is good. You really don't want to take out the low, um, and to see if you make a push to the upside. So we'll see what happens. But for now, we're gonna watch 745 and 765. So we're gonna watch this window next next week to see if we can make this room back to the upside. That would be a nice trade overall. I mean, it's just a sideways chop, anyways. Yeah, you always have to look at this. When you have swings that have a direction like this, that's a trending market, meaning there's a trending price. The price is actually more directional moving. When you have swings that are starting to turn like this in a very kind of like a narrow range, they're very hard to trade. You see the difference between this and this move? So you have high here and low, and then you have this bounce here against, you just take this high to this low and you just run your retracements here. And then if you looking for another push to the downside, because this is a lower high, you're looking for a lower low, right? When you have this price action here like this, it's a tough one to fight. Just it's too choppy. Which is, we know, because the stock is um, took this dip right there, and this is when it was from on the RRG, was from going from weakening, moving, pushing toward the lagging quadrant. You see, your rotation will 100% will confirm your swing weakness. Okay, I can show you any stock that will match, will show you exactly where the stock is actually in. If it's in a lagging quadrant, it will be in the downswing. There is no stock sitting in the upswing in a lagging quadrant. This is what the rotation is for. It's showing you the momentum. It's showing you the, the um, which way the stock is, where the stock is, actually sitting on the quadrant. Anyways, this is the croc that I bought yesterday. I've been watching this stock over a week now. So I finally bought him yesterday, which is fine. What we have here is we have a swing one. This is the swing two. So the swing two right there has, so I run, so we have this low and we have this high. So all we have to do now is just we have to find the tracements between from 86.11 low to 122.84 high. Now in between, as you see, now you have this swing because I follow 3 and 2, meaning 3 bar swing and 2 bar swings. So I do both. I just fed run both of them. Um, where we can find support, we have a weave up off the lows at 102.99. Yesterday we went below the weave up, which is fine. And then we printed this 100.90. The low was 100. The fib was 100.90 and the low was 100.79. And we closed at 102. So I bought it yesterday at 101, I believe, at a 101.40 or something I paid yesterday. So like, okay, fine, let's start something here. And the plan right now, I'm really hoping that some this buy signal triggered this. Okay. And but it has to come at the at that bar. But didn't see one yesterday, but we'll see. We have to wait. Um, so the plan is that we're gonna watch this. It is already down 18% off this high. I mean, the worst case is if there is gonna be a bounce and we're gonna have a further continuation back to the downside, then we're gonna have our second zone, which is gonna be right here. I could the plan right now for me is I just bought shares and I like this company. I had a very good trade last year as well on this I bought on this stock. If the stock managed to pop and then it takes another leg down, I can do an option leap here, and just try to defend this low. One way or another, I mean, try to set up our entry in between here. So the swing is valid. It's definitely is in a downswing right now. We just gotta have to do some dip buying and see if we could, if it'll find support one way or another, and then we'll see if it can make its way up. So the upside that we have is we have a weave up from the highs at 113, and this one around like 102. So it's gonna most likely will circle around here for now. And we'll see what happens. I mean, there's a lot of down bar is due for some sort of a relief rally for sure. It's been taking a lot of beating. And that was a big one here. That's the one I was like, okay, ugh. So these are the two zones that I have, which is between 100 and kind of like, well, I don't know, you call it 92. That will be an 8 point, and then consider as 95 would be a 5 point window to the downside. So 5 and 8. Okay. So got shares. I got no time limit, so I can own this thing for the rest of my life if I want to. But we'll see what happens. It's just something new and just started off something it's a good growth stock. We'll see what happens as it plays out. I mean, eventually in the next couple weeks or so, if it goes right back and we need to take out this high, that would be the ideal move in next couple weeks and see what we'll see. We'll track it every day and I don't know if it's due for some sort of a bounce and take this and go like this. But I don't know that. So we're gonna track it every day. We'll see how it plays out. So that's the plan for the Crocs, ugly sandals. They're very comfortable, I know that, but I don't know. It's just weird looking. Um, this is a growth value rotations. You see, I mean, growth is rotated out here back in March. Since then is making his way up. As you see, hasn't even made it to the leading quadrant, still in the improving quadrant, still got room to go. So the upside is definitely been looking very promising, but at the same time, it's just that pause that we're in is just keeping things, everything pretty much to the sideline. But yesterday, I think a couple of you guys were posting something about Apple. There's a lot of buying going yesterday or something. I guess they're trying to push Apple now and to see if Apple can move it, it can push the market because Apple is losing a lot of market shares. If you noticed, it's down number three now. Microsoft is number one. Second is Nvidia. Third is Apple now. Usually, usually doesn't happen. You see, they're like neck to neck. They're fighting up and down, up and down. So Microsoft is 3.42, Nvidia 3.29, Apple is 2.99 now. How much? Apple is down 19% off the highs. They don't want, they're the only um, Apple just has a very different business model. It's just like I don't know. I mean, I cannot speak. I know they're way smarter people, but I just they're like everybody whoever owns Apple, okay, which I do have a Apple stock for a very long time. Whoever owns Apple now, they just only have one question that why Apple was so damn late to this AI compared to everybody else, you know? Now they just start putting this AI into more into the, CD integrated and all this to the iPhones, things like it's just like it's so late. Last year, like Apple really hasn't taken any the run like advantage of an AI. They just like I don't know. I mean, technically, this company just keep buying their own shares because first they have too much money. They just keep buying their own shares, keep raising dividends. iPhone sales miss, the production is up or down, this and that. They just keep buying their shares. This damn iPhone is just like look at Microsoft. It's just how much NVIDIA GPU they're buying. Amazon. Amazon is the one who cancel AMD chips. It's like we don't want these cheap ones because NVIDIA is NVIDIA. Everybody wants NVIDIA. So I don't know. I mean, same time, Apple's gonna make his own chips and this and this. Yeah, because they don't follow, because they don't, um, have their own operating system. The rest, everything is, Microsoft. I don't know. Very weird. Very, very weird. Um, what was gonna show? Bitcoin. Bitcoin is pulling back now. I think I posted this thing yesterday. So there's nothing to look up. We just have to look down. First zone for the next week, 103, 113. That's a 23.6% retracement, along with this swing low, which is 101. So that will be a first. And then there's this going to be a second one. The second one is going to be here. This is where we took a pretty big leg down. So it's going to be a very strong support level around like this 99, near the 100, but this is 99,490 to be exact. Okay. So this area of support will come into a play if this low of the swing will get taken out. Okay. So this is so right now Bitcoin is sitting at 23.6% retracement off from this high, from this low. Okay. This is 103, 143 is a 23.6% retracement. It has a sell signal, which is you have to act on the next day. Um, doesn't don't didn't has not seen this buy signal yet. So in between, there's many times price can move, and this thing it has to check all the conditions for uh, for the signal to work. So I've been testing some trades the last 2 weeks based on this. I'm trying, I'm fighting. 1 hour is a bit of a mixed results. I'm not gonna. I'll show you here, what I've been doing. This is a 1 hour chart. This is the signal that I set it here, this buy signal. So every time when it triggers, it's going to tell me here on which stock it triggered because I can't sit and click on every chart. So this is, don't pay attention to these ones because over the weekend, there was nothing here yesterday at the close. So it will update this on Monday. So if we look at a 1 hour chart, it's little, I mean, you can get like you can get upside, but it all depends like which God, it looks so messy. I really don't keep messy charts. Let's see, I can always get this thing here, clean him up a little bit. What I see here is let me do the sell one as well so you can see. So these ones is like this is Apple right there. So now if you pay attention, like because the signal triggers on the bar when it closes, not when it's open nor is working. It has to close, okay, for the signal to trigger. So when the signal triggers on the bar, the next signal, sorry, the next bar that will open, that's where you need to get in because it's a 1 hour bar. We need to eliminate or don't even pay attention to a 5 minutes, 10 minutes, 15 minutes, 30 minutes. Those are just very small time frame. The swing turn direction much faster and you get a lot of fall signal. You can get good ones as well. Doesn't, it's not, but your returns on a smaller time frame is going to be a much smaller compared to as you if you gradually increase the time frame. You need if you enter a trade, you need trade to breathe. That's how I see. I don't believe on these like you enter the trade that just moves right away, just start paying you. It happens. That there's a lot of times that you will just pick the perfect entry and then as soon as you enter the trade and it just pops and then it just will never just looks back to that price. It happens, but it doesn't happen that often. That's the point is, you know? But you just, when you buy something, you should always feel confidence because you have to trade with confidence. You can't trade in fear. Oh, I don't know if did I enter too early? These kind of you should feel good. So like, you know what? No, I pulled the trigger at the right time. That's it. I'm in. Now I'm gonna wait. That's how I do it. If the price reaches the certain, like I just showed you an example on Croc, right? On the Crocs, like okay, the price just tested the zone. I bought it. Now, do I feel good about it? Absolutely. Am I confident? 100%. I'm well aware of it. Like, okay, yes, it can go down even more. Okay, fine. It can go down more. I know what my second zone is, right? So I have a plan. So then I'll see how it works out from there. And then all I have to do now is just to wait. So 1 hour you get bit of a mixed show, basically, so I've been testing them back and forth, and you get into a chop, and then, because market is not trending, okay, a good signal works really good in a trending market, okay. In a choppy market you get a lot of false signals. It always like this. It's the same thing with any kind of a range breakout that you think like, okay, fine, we're finally breaking out this range, and that happens to be just a false break, and you just get a full rug pull, a flush down, so we don't know that. So it's just the same thing happens with these ones. Like if you just ignore all this just to follow these ones, which is this go no go, like look how choppy they are. I mean, these are pure indicator based signals. They don't have conditions like mine does. Mine have a very, based on highs and lows and higher lows and lower highs. There are a bunch of conditions that are based on the swing count. These are just the pure indicator signals. He has like four of them that he merged them together. Some are really good, but you can see like how some of these stocks are trading based on like how these blue ones, these are go no go signals, and these ones, the green ones, are mine. You know, so the signal right there, let's like this one, it triggers here on this bar. Now what happened? What happened? See, so this but next one dead, 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 and then it pops. So it took 1, 2, 3 hours, and the fourth hour it get a huge pop to the upside. But the point is that when the signal triggers, that low right there of that bar against this swing low, which is the higher low, it has to hold for the next hour or two or three or four or whatever. Okay. If you have a price that fails, the signal is not technically valid. This bar right there, as soon as gonna close, whenever this condition is met, the signal is gonna fire. That fire, that's where you enter the trade. You stay in a trade, you stay in a trade, and you wait. Now, if the price comes back down, it dips below the low of this bar, and it goes below right here. Oh, it's wrong. So, like this one, 1 hour, 2 hours, 3 hours, 4 hours, five, six, seven. Got a flush down here and all the way back here. See, this is just market just not. I mean, it gave you the option. So what do you make here? 451 to 452. That's a 1 point move in 1 hour for the next 5 hours. This is like a taking a punishment to be in that kind of a trade. But you don't know that how the next 2, 3, 4 hours gonna go once you enter This is what happens when the overall market is choppy, is not moving much. When you have an S&P that is only moving like 10 points, I don't know what kind of a wild move you can expect on stocks. They could get a pop at the open, they're just gonna fade right away. A market willing to manage to stay in that in such a tight net range. I mean, I'm trying like we see like even sell like the triggers here. The high of the bar needs to hold lower bar. That's what you're looking for. Next bar should be a lower bar. It could be an inside bar, then the third should be a lower. But you need to make sure this high is not getting taken out. So the same thing here. See it triggered here when this closes, next bar is lower. Closes here, next bar is lower. So when you go into a bigger time frame, you see it triggered on a very huge bar. But the next bar, you get a lot of big bounce here, but it managed to be a lower bar. So this is a tough one to you already took in such a huge leg down. I mean, but now if you look at this, here comes the indicator signal on the go no go. That gives you the pop right there from this low. That's my income, pushes all the way back down. So I'm just like comparing mine, been noticing this in the last 2 weeks because I have them both just to see like how my works based on my conditions, based on these indicator signals side by side. Mine is just it's good. I like it. I like it. It's kind of mixed because the market is not trending, So it just you see very choppy ranges. There's some you can get a nice pop here and one or two, but depends. But Google doesn't really move much. It stays dead most of the time. It'll move and move. Amazon is just you see like it gets is busy, you know. So if you look at on a daily time frame, it's much cleaner, better look, or on a weekly time frame. See, that's Amazon right there. I'm getting hit hard with these ones. Here's Tesla. So Tesla basically is the I don't had this. I just because I had the whole thing now, I can just plot them on any stock. So it's gonna show you the full chart where the last time it triggered because when the conditions were all met. So there was this one right here. Now this one right there is the sell signal. The sell signal is the same way as a buy signal. So that triggers here at the close on this bar. The next bar should be lower. That's the lower bar. Well, no, we don't know that the third one is going to be lower as well. We don't know that. What I see is this is I'm going to be putting out some trades for you, for all of you starting next month. And when I'm going to see one of these, the next, is going to have a hard stop loss right at the high of the bar. Okay. So we're going to have to find entries, meaning when I see this, I'll enter the trade and we're going to look for the next day rollover. The next bar should be a lower. It could be an inside day. That is fine. That still counts. But then the third bar should be a lower. You were looking for a lower bar after this signal triggers. Same thing here. See, yesterday was a lower bar. Okay. So I think it should be good. See, like Amazon, lower bar. Triggered here, lower bar. We don't know this, so don't expect this kind of a massive like continuation for like days after days after days. That's not the point. Well, I don't know if this Amazon is just gonna keep going like this again. It can, but we don't know that. But our I have a band here that tells you exactly what the one standard deviation move is on a stock. It actually closes right above. The one standard deviation move yesterday was 345. The low was 345. Let me show you here on what this did on Amazon. Is actually right there at the band. Let me see what else I can show you here. 625. So it was 629.45. The low was 632 yesterday. So it was pretty close. So which one has? So you have a Tesla here. You have Nvidia here. You see, Nvidia had a lower bar yesterday. See, triggered here, inside day, lower bar. It works. So don't look at this where that doesn't work. It works. It can work on some bigger time frame, like monthly, lower bar. Like it's the same thing doing a weekly, doesn't matter. You get much better signal results on a higher time frame. But as soon as you're gonna get yourself into because I've tested them, I that's what I do. I test multiple time frames. Just you just get a lot of false uh, signals on a shorter time frame because the direction of the swings. You see, like how fast narrow these swings are. So, like Apple is very tricky. What Apple is doing. So Apple had so swing is up, which is good. We have a three higher bars and sell signal triggered. I was like, oh boy. And the next day, yesterday, was a lower bar again. So it closes right there at 200. Yeah, Apple is just trying to battle this 200 level range here. So the one on the top now here's a good one. Look at this. There's a go no go signal triggered here, and this one sells there at the same time. And then we got the lower bar the next day, inside day, lower bar, lower bar, See, Apple had a little bit of a beating going here ever since. So this one is failed. Mine took over from here. So now, yesterday, this triggered. You see, this is something going on. It's kind of getting really choppy because I haven't seen any buy sell at the same. I'm gonna really look into this. Like, what exactly caused this thing here? Like, something to trigger it here because you don't instantly see this like sell to buy. You know, like you had a buy which was here, and then you had 1, 2, 3, 4, 5, 6. You have like see 5, 6 days until this sell signal triggered here on this bar. And then you had this inside day. Then you had a higher bar, but this high is still didn't got taken out. You see that high right there must hold. That's the key. Okay. But the only tricky part about this is like if you take a trade and then the next day you're looking for this market to take a dip and then the next day the market gaps up, oh yeah, you screwed. That's the risk. You know. Now we're gonna it can happen. So you just because the thing is this that the signal triggers based on a close, not on the open, not at the low, based on the close because It measure the whole swing where it is for this thing to trigger. So we got, see, Meta, nothing. Let's see what else doesn't have. Netflix, nothing. Microsoft, yes, very. You see how choppy it is. We still, the point is that it triggered here. Next bar was a lower bar, but this kind of is a tough one because markets has such a huge upside. You don't like instantly flush down after gaining this much upside. You have to be real careful as well which one to take. You don't just jump on everything, you know? The best one is always for me, like the way how which ones that I consider is the ones that they're like weakening on the RRG and they're like pointing down this way. If something triggers here, the momentum on that stock is already heading toward the weakening, pointing toward the lagging quadrant. So you have a pretty good chance for that you might this thing might play out because there's some weakness is coming up. So that's why I have this. So I watch all these 50 stocks here. Meta, nothing. Google, nothing. Amazon, yes. AMD, yes. Triggered yesterday here. See, lower bar, lower bar. You always have to look at the next bar when signal triggers up on the top. Qualcomm, yeah, no. It was his here, but no buy signal yet. But again, this is the one ranking because of the blue bar. Remember we talked about it? Red to blue, and then it stays in red. So your ranking has to go back to green to orange to stay green. Broadcom, yes. See, a lot of semis are about to take a pause. Or they are like they haven't really moved much. They're not moving much from a week. And I'll show you why. Supermicro here, Micron, and this is just a very low 2.2 point trades. I need to find alpha trades, tech, this is here, applied. See, a lot of these semis arm yesterday took a leg down. APP. But now you have to keep one thing in mind that swing is up. You are looking to fight 1 or 2 days on upswing, you know? And when you had a stock that has made such a huge move to the upside, the sell signal triggers up on the top, well, that's you just thinking like, okay, well, yeah, this run is gonna fade, or I mean, it can, but your odds are pretty low. You don't just rip to the upside on all of a sudden you're just flushing down. So I have to look and to see where the stock is, and this is the main window right there. Uber, nothing. Palantir, yes, right there. So there's a pretty strong close yesterday. This might fail. It's a monster close, but I don't know. You never know. It could be an inside day on Monday for Palantir. Swing is up. Um, yeah, a lot of them they reset because some of the sessions the trading goes until post market. The one market officially closed at 3 o'clock, but the post market goes opens up until 7 o'clock. So Tesla and Nvidia and all these stuff, they don't move much, but they're always moving until 7 o'clock my time. Then they will stop. And I've noticed that that, sometimes Tesla moves um 5, 6, 7 points, but depends where it closes at the bell, and then it trades up on a pre-market, and then the swing, and it will the signals start fighting in the, like, what the hell? Because they're working, because the stock is moving. I've seen many here on 1 hour time frame, not the daily because the day hasn't even started yet. Like, I've seen a lot of these on the 1 hour time frame. Is like, if this is a pre-market move. Now, like, look at this way. Apple. Remember, Apple had a pop on when those judges and this and that. Apple went up to 207, which was on Wednesday night. 207. We haven't even got to 207 till the market faded. This see this 207 print. This is the after hours. That was the overnight, the nighttime one. Remember, I even took a snapshot and I even posted on main chat. I was like, "Hey, Apple's at 207." That's right there, 207.90. But what is the high as of yesterday? 201. So there's some of these swings where they change the because the stock trades 24 hours now. There's another thing. So if I log in, the stocks are moving. The swings are changing directions as well. Like these swings right there, as you see from here, that goes down like this, and they're moving after hours. So this swing right there from 199.90, I don't know what the close was here. Let's see. This was two. What day was that? Wednesday. Okay. I'm looking here. Supposed to be looking. Supposed to be looking here. Let me see. When was that news came out? Yeah, here on Thursday. Yeah, Thursday. Yeah, so the Thursday, which was this on Wednesday, 28th. Yeah. And the high here was what? 203. The low was 198. Oh, you know what? I can do this. Time box. Tell you exactly each day what the high and low is. Yeah. So that's your 4 days of Apple movement. Friday, Thursday, Wednesday, and Tuesday. That's a time box. They call Gann time box. It marks the exact high and low that adjust with the price and time. So you can do on any stock. So see my Gann folder? I'm keep adding stuff here. Crazy. Uh, that's the weekly. I can do. That's your daily. So yesterday high was 363. Low is this. You see, you can do just each day. Just copy paste them. So because I just change it to a day, so that gives you three, has your 4 boxes for 1 week, for this week. So Tesla opened here and it actually closed right there. So just literally faded for the whole week. You see? So when you look at the price on a chart, if you have boxes that are stacking up, meaning is the trend is up. It's starting to go sideways, and we can do it here as a matter of fact. Let's do this. Let me show you a time box. Oh, not in a daily. It's going to be very, because there's a daily 1 bar. Yeah, I can do it in 1 hour. So you can do, this is the whole week of price. Okay. It's 1 week of price right there. So we open here. here. He made a move down, up, went all the way back down here to the open price, and then will manage it back up. You see what? So it's like when you start looking at the time boxes, it's going to show you exactly how the price is. You see, it's just sideways. It's a very good way. I should start using this thing more. I used to track them all the time. So this way will tell you is if these boxes are stacking up, you see, one after another, like because these blocks, the price is trending up. See, look at that. So now if you go back here to 1 hour, narrow this thing down, you see, it's up, up, sideways, up, you see. And now what you see here, last 3 weeks, what this market is doing, nothing. You can see the difference. Remember, the rising trend is this. They're more directional. Now, if you go back here, does it look like a directional to you? A weekly is even better. I'm just doing it on this is not a directional market. I mean, it's not a direction. If you take this low, yes, you can make a case here, but at the same time, you can make the case down here as well. So where do we go? Let's make a we. Directional trend resume in a one direction. It has a rising slope. Okay, remember we always talk about a wave count. Your wave count must have a right look. It's the same thing when the price trends to the upside. It has to have a rising trend channel, I would say. Price moves like this. When you're coming down, it's gonna have a down slope. Times pushing like this. So when you have you coming down and you going back like this is a trading range. Because you took a sharp dive lower, but you're making a full reversal back up. So when you have swing that goes like this, up, down, you see, higher highs, higher lows. So when you draw something like this, that they're more directional. That's not the case over there. That's why it is S&P is flat for the year. But and everything to everyone, it looks like it's up like 50%, 50% year to date. But again, this is what it is. I mean, after next month is going to be a half year. I mean, only starting a 6 month now. I mean, it's just still, I still have a lot of time to go. I don't know. Market is just ignoring pretty much every data now. If you noticed, it literally ignores every data now. CPI, PPI, consumer, this, and it just market just done nothing. Market responding right now only on the word tariffs. That's it. And it's been and it is and most likely, I don't know, like it's just because this is all about their tariffs. because of this. Soon as he pulled out the liberation card, he ended board on a white, whatever, on a white lawn or whatever, is when the market went under pressure. So I don't know. Just really tired, man. Just I hate it. But at the same time, we're risking money and yeah, you get a reward with the 400 point open and everybody's super excited for the next day to open and this and this. And by the time they're gonna ring the bell and they know they want to make sure these retailers are just make as less as possible. Yeah, give a 100 point open to people to people who cash out their calls and stuff. But they will love to give you 100 points drawdown open in a heartbeat. They just there's open 100 points. But if you notice that dips are getting bought, I don't think like I mean I don't know like how many people out there that are sitting with the bear bear outfit on, but it just it's very hard to fight the upswing or it's the same thing like to the downside. We'll take it day by day, man. There's nothing else to be super excited about. It's just a flat market. That's all I can say. As I said, we're 4% to 4% to the highs to the 200 here. But if we if we can do this, leave this 200 here. Let's do an 80-21 crossover. There you go. That's your 800, 8, what is that? 821 multiplot. That's your 8 EMA right there. And that's your 21. That's up as well. So this is good. Let's do the cloud. There you go. I mean, there's nothing bearish about the market. Absolutely not. I mean, which one are these? Oh, 9 and 20. Need this. I have 8 and 21 here. So same thing. There's absolutely nothing bearish about it. Yeah, I just wanna. I'll see. I have plenty of time over the weekend. I gotta have to. I'm gonna sit around. When I'm gonna have time. I'm gonna do some things. I gotta go to the store and stuff. I'm gonna see if we can line up a butterfly or a butterfly here. So if they're looking to close below 5,900, okay, for the collar to expire, so they're gonna make money if the S&P closes below 5905, right? If that's the case, then you gotta center something. See, the only hard part about the butterfly is where you're gonna center the butterfly is which you call the body of the butterfly. This. Where the center? If you pick this a center, but then you have to buy something here in the money. As soon as you're gonna go in the money on this kind of a price tag, it ain't gonna be cheap. Well, it's gonna give it depends how you adjust your delta. Then you have to buy something here. So now you're short two, and then you long one and long one. So you long two calls against two short calls. So you can just tilt it. Depends how you want to make the butterfly. You can tilt it a little bit more to the downside. Now you want to bring more delta. If you bring more delta, then you lose theta. If you keep the theta flat, sorry, the delta flat, let's say to 20 cents, then you have a much positive theta. It's called flat theta, sorry, flat delta theta positive. Butterfly is a very good strategy, but on a wild ranges, yeah, butterfly can kick your ass. Yeah, you don't want to go too, you don't want too wild because these 400-point moves on a butterfly is not a very ideal strategy, you know? Um, I'll see. I'm gonna play around for this thing. I want to see. Just, I'm gonna watch this. We're gonna track this every day, see how much it moves. Because I always say it's like choppy, choppy next index is rising. I always write like this. I watch him and I just like, okay, let's still keep an eye on it and see what happens. We'll see what happens here. Well, ranking back to three, that's a good sign from orange to green. In the worst case, it can turn to red. Um, Only did this quarterly, I don't know, some up, some down, and it's just mixed, you know. I just, what I see is like, is the big names, like these stocks has to push Nasdaq for S&P to rally. It's in this move right there, which is off by 4%. It this doesn't add up, you know? So so this dip was in what? In Q1, correct? No. No, that's for this quarter because the quarter ends next month. So the last quarter was this one, January, February, March. Okay, so this is this quarter. So this was the quarter, first quarter of the year right there. Three, which is this. So now we had, not this, I'm done. This was a three. And this is going to be a second one. Now we have one more monthly bar. To come here will be two. Then we have a third and fourth. Yeah, because if you look at here, it's just a seasonality right there. That's the January down, February was down, March was down, well, April was down, and then this is the May that we just had. It's just this 6.79. This is right here, monthly range will tell you exactly which month was down and which month was up. Put a cursor here, right there, cursor price 2.57, monthly return. Yeah, tells you exactly on a scale right there, 7. This one right there was 6. Same number here on this thing. So the the whole bar, it gives you a range. This is the return, percentage return. This is the entire range for the month from from high to low. So last month was 15.10% move and a one single month. from the high to the low. This month was 6.799. So it isn't round, it just rounded up to 7. Right there, 7. But not the close though. Close is here. You just look for a high and low. So ranges. It was 6.5, 4.39, 6.10. You see, like it'll tell you exactly which month. Now, if we go back, let's look at this. What's the best way to look at? Last year of June, right there, was 5.53% range. Okay. So 5.53% range was last year in June. So if that's the case, that will put you back here to the highs. Let's see this one. May, June. 6.9, whatever, 6.8%. So you have 5 here, 5.53, and you have 6.88. June is pretty damn strong. I know them just the this right here. Look, what was the Hector or whatever was sending me a message saying like I said like yeah, June. I'm looking at this. Like, it's looking like a beast to me. But again, if it's gonna play out, we don't know that. But if we go back here to like how the year is going compared to the seasonality, this is the only month that actually played out so far, like two of them so far out of three. So if you look at the actual average, January was up, we had an up January fine. February was flat, we were down on February. Okay, how much we were down? We had a range of 5.3%. That's the right there. 0.2. What the hell is this? Cursor price 5.4%. 5.4% here. Then we had a March. Okay, that's supposed to be up. A huge drawdown. April is the second strongest month of the year since 1975. After November, November is the strongest month of the year. Okay, April considers the second strongest month of the year. And what happened in April last month? 15.10% drawdown. But that's the reversal that kicked in, went back to completely flat with a massive pin here. Because if you look at April, is the as I said, it's the second strongest month of the year. It has a history. This tracks since 75 to 2025. I mean, most people track seasonality for like 5 years or 10 years. I go all the way back. I was like, just do full. Now look at May. So if you look at May, it's like they have everybody say sell in May and go away. It doesn't like May is always a positive month. Look at June and July. July is pretty strong. August is pretty dead. September is a worse month. But you see what we're doing this year. Now, if we go back here, we can do That's the last 5 years. This was last year of 2024. Fine, yeah, we had a trending market. You see, last year, April was pretty rough. It is right here. In May, and then this is June. And look at this. I'm gonna go back to year to date. You see how much stuff that I track every day? It's like headache sometimes. Look at May of last year, 6.60, 6.99. We just ended yesterday. I have presidential, well, there's no point to run presidential cycles. We have a sitting president now. Well, you have to look at this way, right? A guy who I just want you to think and just to ask yourself a question, okay? And this is how I see things. Like he got in the office here. He hasn't, and under his terms, whatever is going on right now on day-to-day basis, he hasn't even made any move, any gain under his name. He took office right here. This black line is the exact day. I'm tracking his first term with his second term. This is when Biden gets in, right here on this day, and he left here. He got in the office right here. Now you have to ask yourself this question: is a sitting president, the guy who is, call it whatever you want to call him, crazy about the stock market? When it drops, he never watches. When it goes up, he's always watching. That he's not gonna get anything under his name, and he's doing his second term, and you think he's gonna leave his second term on some bad note or something? Or I'm just, he's gonna do things like people is gonna remember that, you know, it's just him. Just what I'm saying is that this trading mentality from day to day, who's just like chasing these moves, they just don't look at the big picture. They're just too focused, like, oh, how the market is gonna open on Monday. Oh, how are we gonna, okay, fine, it'll open, no one, just relax. I'm just not my, we're gonna go up here, like we're gonna go up here, then we're gonna go like this. Like, I don't know these things, like, like, how do you know this? Just the market will make a new high. It always does. It's just there's nothing new about it. Look what happens here. COVID dropped. Look what happened here at the highs. It's totally normal. And if we manage to go, if we, like, that's totally possible. You coming back up after taking such a huge beating. What do you think? You're just gonna rip through it? You just like, well, here we have Fed and this and this. You know, market doesn't need Fed. Market has enough liquidity. They're fine. It's a functional. There's, he's trying to just cut these rates down. There's, I mean, he knows how to boost the market. That's I can tell you that. He's doing exactly. Well, look at this. I'm telling you, if you really pay attention to this chart, okay, it's gonna change your thinking. Look exactly what is happening right now, what happened before. Look at his under his term, what he's doing. Look what the price is telling you. 1.0 and 2.0. Full V. Same we made back there. What Fed was in. Okay, fine. That's not the point. You're looking at the price, you study the price. You put all the fundamentals, all the political stuff on the one side. Look what the price is showing you. This market is gonna get to 7,400. That's my number on him. I don't know. It's gonna happen 2 years from now or by the time he leaves the office. 7,400 is where I see this S&P is going. And then in the next 4 years under his term. This market is repeating exactly the same pattern over and over again. People just not paying attention. High here, low here. You take this high to this low, you project 200%, 45.95, bear market. Made a U-shaped recovery. You take this high to this low, 200% to the penny, bear market. Where do you think we're going next? Here. Now you take this high, take this low, project the upside to 200, 74.59 to be exact. What has happened twice? It has a very high probability it's going to happen again. That's what I'm saying. Gotta buy the dips. This is the dip buying year. The payoff is going to be next year. We happen to close flat within a 5% range. It's the only thing that I cannot personally wrap my head around is this, that S&P, which had a 22% double-digit gain from the last 2 years, okay, is to make the case for the third year, which we're in right now, okay, is to expect a double-digit return. That's the only thing that is pushing me back, keeping me thinking like we're just gonna stay range bound. That's how I see it. Look at this, 22%, 22%. That's 2 years. We gonna take a pause somewhere, right? Makes sense. Don't you think it's healthy for the overall market as well to take a bit of a breather? This is exactly how I see it. This is running the same kind of phase that's if I'm watching, well, this is a weekly chart anyways, nothing is gonna give me a clue in a matter of a week or two. Is this that if we do manage to get up, This is gonna be happen like this. You see, one day pop, next day a massive reversal week right there. Look at that outside bar on that week. And then 3 weeks down, rally right back up. He just because what do you think he's doing? It's just because it reaches that number. That's your big resistance level because that's where you took the 35% hit to the downside. We think just gonna come here, sit here for a day, and then go like this. But if it can happen, but look how you coming back up without any sort of setback. You're just ripping right back up. The same thing happening here. There's no pulling back here. It's just the train is keep on going. Point for me, but for me to make the case with him is that it's just like, well, he's not gonna see anything above this print. I mean, really? So he got in the office here on this day and he's not gonna see anything. If I buy on Monday and don't look at the S&P for the next 3.5 years to 7,400 to be just not to, that's a 25% upside. Now, the 25% upside is not like it's not doable. It has never been, it has never happened. It did here and here, totally normal. But over time, but how long it will take, could take another year, year and a half. That's the point, but the point is just to get here. When we get here, another flush out. That's what I'm saying. This is a dip buying year. The payoff, the return is going to be next year. Might just chop around here on the top, might come down 5%, rally right back up. I think there are more buyers now than sellers. And there's a lot of people regretting not to be each first to be on the wrong side of the trade, thinking like, yeah, we took a leg down and we're gonna take another drawdown. And I mean, I think anything can happen. But people who still sitting with the big hope that we're gonna go down and retest the lows and stuff are the one who pay the big price. Yeah, I cannot see him sitting there thinking that he's not gonna be able to, that there's gonna be a multi-year bear market starting. I don't know how do you some of them like really come up with this. I mean, the thing is, there's stocks that which were down. We can go back here and look at some of these names. Why my stuff is all over the place now. Oh. So if you look at some of these names here, like, okay, let's say look at Tesla. Now Tesla is like down 56, up 71. See, like you can look at multiple names like Nvidia, down 43, up 65 from peak to trough. So these stocks just like Apple still struggling around, still down 32, still gonna make a swing up. Then we'll measure the exact. Netflix is up. Yeah, this is yeah. You can see this initial dip down was 22, up 48. Sorry. Yeah. No, this is 48. Should be all the way to the down. This is up. But the rest of the stock, like let's say like Meta, you see, down 35, up 38. I mean, if you look at all of these stocks on a weekly time frame, you see all these bars are blue. What does that tell you? A weekly time frame ranking is gonna throw you off. That's what I'm saying. It's just tough to make a case for a double digit return of this year. If I have to, I don't really make calls like this, but if I have to make a call on an S&P for the rest of the year, it's gonna close under 5%. That's how I see it. It can gain upside, but it's gonna fade. That's how I see it. I don't see a double digit return this year. I can be wrong, but I just don't see it. There's just too many things just not lining up for me to make a bully. Next year, yes, I will see an upside for sure. But this year, no, it's just looking at the stocks and stuff and yeah, you don't just instantly make V and you're just never gonna take a pause. Yeah, you're gonna take a pause. That pause is gonna it's just when the play is just gonna slow down. You're taking such a massive leg lower. You're just recovering. It's a good thing that you're recovering pretty fast because upside after like it always grinds up. It's just the way the market is right now. Market is just very aggressive the way it trades. It sells off really hard and it's gonna get to a like extremely oversold conditions. And then from there, that's just the mean reversion move, So I don't want to be sound negative. I don't do that, but it just it's tough to make a 22, like not 22, double digit return. I mean, if the only way it can happen is everything turns positive and these things move and these stocks moves. That's all. Microsoft is okay. 10% is still better than being negative, but it's just not enough for just one stock to lift up the whole market when Nvidia and Apple is down 20 and Nvidia is flat. We need these three leaders. And Nvidia had a monster run over the years. I don't know. Their earnings are pretty excellent results. Company is in cash machine, man. Wow. How they're selling these GPUs and how much demand is there for all these companies, like especially Microsoft, who's like buying so much and so many of them. I mean, it's crazy to really think and. Tesla is just sorry, Nvidia is just a beast company, man. I did post this one. Look at this. June, Mag 7 seasonality. S&P looks pretty good. Nvidia looks very choppy. up mid kind of, last week, a little down. Tesla showing really good strength. Look at this. This needs to overcome. I don't know, it just doesn't lines up well with with the RRG. The RRG is in a lagging quadrant. If that would improve, Apple can pick up some momentum for there for sure in the coming days. It might overcome, but we're gonna keep an eye on it. But again, not every like last month, Apple was pretty good, but it didn't show. Remember, I think I posted this on yesterday because I always track seasonality based on what was a monthly performance of a stock based on their seasonality. Yeah. This would give you the here. So if we go back here, this was the last month, May, and then see like okay, so which one the worst one was? Amazon. And you see, like too many until the next. And look at Apple. So now if we go back here, Tesla up 24, Nvidia 24, Meta 17, Microsoft 16, Amazon 11, Google 8, Netflix 6.15, and Apple. See, Apple just went completely opposite. If May seasonality didn't play out, and now we're dealing with June, I think it's gonna flip. Because technically it looks like the June is the worst month, but that happened all in May, so June should be okay. Because they know that people start watching these things, and they flip them. I've been noticing that thing. The month that shows that it's strong, they're gonna beat up the stock, and then the people just don't want to be in that stock, and then the next month the stock pops. The seasonality just switch. I mean, it's not a joke. I mean, you have to look at this, but this is from 1983. 1983. This is the oldest chart. This is from 1975. Well, I know we can go back to 1950s, but I do everything. The video is from 2000. Look at the difference. How old Apple is. Microsoft in 1987. Each month it's what I've been noticing. Like these market makers are cute. They know that people are positioning themselves with based on these seasonality flying charts, flying everywhere. And it's like, yeah, just flip them. People go full bearish based on the seasonality because it has an it is tracking the performance since 1983 until last year, you know, and it shows like, okay, the actual June performance is this. That's how it takes specifically just the June since 1983 to show you what the average is. That doesn't mean exactly, I mean, it's probability, but again, the point is like a lot of time these charts does play out. We just looked at the results from last month. So we're gonna keep an eye on it. We're gonna see what happens. What else? I already did some scans and stuff. But then gotta get up and stretch a little bit. Apple is scary. Hey, Apple is a tragedy bond, buddy. You can never go wrong owning Apple. Okay, mark my words. It's a monster company, man. Apple's gonna pay you a guaranteed return plus dividend. Okay, let's do leading quadrant, looking at a northeast direction of this around all 500. You can do 100. Let's do all 500. These are the stocks to hunt. Oh, not that many, 38. Well, out of 500 stocks. Almost page. There you are. These are the stocks has the potential to make a move in the coming weeks. So this real estate, Boston, Day, Camden Properties, and real estate. There's few some real estate. Wow, equality residential properties, Essex property. Yeah, well, you know what? Real estate is looking for a move. Real estate, Simon Properties right here. You see, like how many the real estate names popping up here? What does it tell you? What does it tell you? Made America here. Yeah, hang on. I got a better solution. Let me close this. This is my real estate. There you go. Yep. There you go. Yeah, baby. This is the one. This is the one to bet on next month. It's the real estate. These names. How they're actually doing. Oh, yeah. Let's see. How many stocks are hey, dude, come on. Yeah, okay, now. All right. How many stocks are down? Little Bell Tower. This is the one in Chicago. AMT, American Tower, is doing good. Ooh, it's in a second swing as well. SBA Communication is in second. There's my Crown Castle. Love this. It's up 10%. Public Storage, PSA. 3, Mid America. You see all these one Camden property right there, 1% extra. CL Simon property right there, 5. Yeah, these are the ones that are willing to make a move. What did I do here? Okay. Yeah, these are the ones that are willing to make a move. Rotation right there, the real estate right there. See how they're all pointing? Hang on. Retrade the leader. I don't care about anything else. Go here. Go to the real estate. Oops. Go to the holdings. Okay. American Tower 9.35. Well Tower 8.76. Prologis PLD is the top player. And AMT. AMT, I know that. We traded that stock many. Here's a Crown Castle 4. Simon Property 4.66. Need to focus on these three stocks, 3 to 4 stocks up on the top right there. So we have EQI, EXIQ, EX right there. The stock is down 5.73%. I don't think it's been a long time. Because I have other folder. I don't even come here anymore to these folders. I used to track them each. I had them by sector, material, the consumer staples. Um, so EQIX. Well, hang on a second. Where is that stock? You can do EMT as well. It's right there. Nah, see, it's too close. Too close. As EMT, man. This is the one to grab right there. This the stock moves good. It looks like a triangle. Oh man, this is a triangle. It's gonna kill us. Yeah, it's almost near the third swing as well. Nothing so far. Yeah, I'll watch. Let me watch this one. Oh boy. Well tower. Yeah, because these stocks has taken such a huge. This they probably set it right at 7, 8.6. Yeah, close to it. Yeah, see, 7, 8.6 rejection. I mean, it might clear through it because it's coming time second time. So it already took a leg down. I like this one. You see, like I just compressed this chart right there. That's what I know what to look for. That's it. That's how fast I can read a chart. I just because I'm not really worried about what happened. I'm just worried about the current swing. But I just go like this just to see. Okay, where is the high and low is, and that's it. I know what to look for. Do I like the trade? Do I don't like the trade? Is just that trade is kind of sideways? It's just what you're basically looking for is just you try to find something off the lows more into like having a rising as channel, you know? Those are the ones that you are more interested, like something like this, but didn't. not recently, but how it was before. You see, like something is up, rising up. Here, it's starting, but one, two, three to swing to the downside. I like this stock of the company, but these are these are very rate sensitive stocks. Keep that thing in mind when you trying to trade these ones. Yeah, 10-year pops. Yeah, these suckers are gonna take a dive right away. Yeah, they're very rate sensitive stocks. Went to right there, 64. See, outside bar. After this is trying. Supposed to be a higher bar. Oh boy. See, like this. That's what you want to catch. One after another. That whatever, that doji looking candle. This just once it triggers on a daily bar, that the low has to hold. That's all. That's your key right there. And you just stay in a trade. And how far it goes, well, we have our fibs. We don't know how far it's gonna go. Yeah, some of them are it's beautiful. The instead, I'm gonna see if I can find something. EMT is a good one. It has a really good alpha. I've traded that stock many times before. Let me figure out this still a third swing. It just needs to push. It need to push. That's all. See, it's a such a clean one, two, three, four, five. Here's your three. Here's your four. Here's your five. Make one here. One, two, three. Make it A, B, C if you want. A, B, C. So what are you looking for now? Five up. You have a completed 5 waves. You have a eight swing sequence here. Structure here on the wave count. So if I can count like this, you see, I I look at a chart. My brain is just kind of wired this way. I can count them just by looking at them. Now, what we can do, we put a three and a two. See what the resistance is. Okay. As you weave up. Okay. So right there at the high. So we're at 215 at the weave up. Off the low is 207. Swing two. Okay. Swing is up. That's a good thing. I don't have the customized ranking here. Hang on. This might take a shot at it on next week. I gotta change this thing manually quick. This blue and then red. This is my custom three, custom two, custom one, and zero. That's it. You see, ranking is at two. Yeah, this is one. We need green number. I'll watch. Okay, that's why it's kind of chopping around. When it turns when it turns green, then we'll go. In the meantime, we're gonna watch this. Do a trend line here. That's your resistance. That's your trend line resistance. Need to take out the swing this high, which is 230. That's a big move. Phew, it's a big move. Sitting right at Viva. Let me watch this thing on Monday and we'll see what we can do. You see right there, red, blue, red, red, red until green here. That's when then the stock runs. So you just like going in, yeah, I mean, buying something here instead of buying something up here. Yeah, I mean, of course, there's always gonna be difference, you know. I mean, you could have bought something here, but now you're interested in paying this price. I'd much rather pay this price and see if that can break out. But let me watch. I'll watch. Keep an eye on it. Yeah, I have AMT here. What did I do here? Right here. I know I followed this stock. Okay. Lot of go no go signal triggering here. This one failed. I'll sell here. No buy yet off the from this low, which was at 209 until 214. Yeah, there's no buy signal yet. I'll keep an eye on it. There's a huge flush out here. Here, what else we're watching? Expedia. Some of these are I just ran a scan on here, MasterCard. I just ran a scan on all 500 stocks. They're not that many like strong names. But real estate definitely looking good for next month. So I see it. A lot of these companies are so McCormick, you see, it's just MasterCard, this. Okay. We can do I can do an infotech, but it's not gonna 500 is just gonna scan pretty much everything. I can do where's mid cap now? There's some stocks, good stocks in mid cap as well. But there's some companies I've never even heard of them. There's 28 stocks in the mid cap index and it's exporting goods as well. See, like these names. These are these are the ones like like when I'm buying like this, what I'm showing you. You find moment. First is not just my my friend told me or somebody told you on Twitter or that buy this stock is not how you buy stocks. First is you find momentum. Look for momentum, I'm sorry. Second is you look for alpha. Third, you look for a swing. That's it. That's how you structure. That's how you structure a trade. So these are the ones like, okay, this is a mid cap. We have American Homes, Blackbird. No, I don't know, man. The Dick's Sporting Goods. See, some of these names, you haven't even heard of them. It's Macy's here. See, you just got a Goodyear Tire and Rubber. These are the mid cap companies, though. Yeah, market cap, but $127 stock, not bad. Look, full U shape reversal. Wow, this stock got killed, I think. The $54 stock. One, two, three, four. You can just do from this low. One, two, three, four, five. See, you can do four, five, or one, two case here on this Fidelity National Financial. See, this is a measured move, but no. Yeah, I just want to make sure this, if you want to call this a third wave, come on, buddy, stop right there. Yeah, it's good. Yeah, you want to make sure the third wave is, it's not a short one. I mean, there's few names here. I have a powerful scanner. You see all this? These are different scripts with different conditions. Exactly what I'm looking for. It just filters everything, you know? Um, we want to go 1500. It's gonna, where's my, what the heck is my info tag right there? Hmm, only two names. What's that? These are the only two names. Only two names. What happened here? It's gonna freeze up my thing because I'm running non-stop scans one after another. The Infotech has, I don't know, 100 stocks or so. $75 stock, man. This stock doesn't move. Even know what the ATR is. Oh boy, that's crazy. Stock is dead. It's a 3 point stock. Yeah, because it took this huge leg down this way. Yeah, it looks like some sort of relief bounce. Oh yeah, you see, stock is making lower lows. That was the initial. You see, that's exactly where the stock is sitting right now. No, hang on. Why is it getting so difficult to work today? Yeah, Yeah, see this? Yeah, it's gonna be some sort of relief bounce because it has a massive, huge gap. Okay. Inside week is just I mean, how many okay, look how many stocks closed the week. 1 week S&P inside bar scan. Oh boy. 239 stocks closed the week with an inside weekly bar out of 500. So, can what do you make out of it? Nothing. Indecision bars with the overall market as what S&P was doing. 239, more almost half of it. How many stocks has made a lower bar? We can do that. Inside bar, lower bar, 46. So 46 stocks has made a new weekly lower bar, lower low, lower low. And then any go signal, do. Hmm. These are all the stocks that triggered a go signal yesterday on a daily bar. Amgen, Chipotle is in there. Workday, Uber. Some are good. I mean, don't get me, some are good, but we can do this. See, it's gonna show you that what exactly the signal just triggered. It filters it. So now I can put mine. Hmm, hmm. See, mine triggered here. Go no go signal triggers here. Just to compare the the last. Now if I take, yeah, my trigger in this swing. Oh, McDonald's. Okay. Yeah, they're all air product. They're all gonna have a go go time now. CMG. See, it's very choppy back and forth. Um, what hasn't worked? Oh, boy. Trying to fill the gap. Gee, what's going on here? Choppy price action. I mean, nice. Um, that's it. Let's do. You want to look at McDonald's? I have McDonald's here. Why? What happened? Right here. I mean, the swing is down on McDonald's here. Um, I've been. We need to break this 316 right there if we can. So it's not going to be a very I don't know. Like, looks okay, but stock is a little choppy for sure. And I'm trying to play this swing right there. That's what I'm planning to do. You see this low to this high to this. The only reason I'm doing this is because this. Okay, so we have a nice rotation in play. If this lines up, remember we did a Google trade? Look at Google now. It's not hasn't really moved much this week, but we cashed it out. It was a good trade, right? It was sitting right here. So caught the whole thing. It was a good, I mean, it was a decent trade. This pig right there going going opposite on me, but it will turn around. Yeah, micro. It's just, so what I'm doing is I took this swing low to this high of 321 and and this low against this RRG. So if the momentum picks up from here, it has alpha, I mean, and then I have this hourly 1-2 swing on 1 hour against this 305. You see 305 here and this 305. That's a fail swing. You remember what happens here? Fail swing, you got one, and this is two. So for this third swing to the upside. So that's what I can blow this thing up like this. Now you can just simply take your fibs from here to here, not to this low, this, because this is where you have the fail swing. Because this low right there did not make a new low. Yeah, it's this where it found support here. Yeah, went up to 315. The one standard deviation move, if from here up, is 316.28. If this breaks right there, then we can look for the upside print from there. What we can do now is we can run swings from this low to this high now, not from this. If we found the retracement, now we're looking up, right? 314 and 316. That 316 right there is the one standard deviation move off right there on the daily chart from the top. 2 is here and 3 is here. So the stock is in between 1 and 2 standard deviation move. These lines right there that you see, this one, this one, this one, this is a daily 1, 2, and 3 standard deviation move. These are the weekly standard deviation moves right there, 1, 2, and 3. These are the monthly ones right here. If the stock is coming down, I will have a pretty good idea where the stock might take a pause. This is when it completes someone, makes a one standard deviation move. So the lot of time a stock will hit that line and it's gonna pop. So that happens as well. I can show you this one closes below. I can show you a couple tests like when the price comes this way kind of see right here. Look at this AMATC came here, bounce, came here, bounce. So you're gonna there's a lot of time. What happens after the couple days, and so that's different thing. But it's moving. So for this stock right now, the upside is 161. This with the downside is 156.50, which is the second one. Actually, the third one. This is the second. That's the first one. It's small. Uber is pulling back. You notice that? Look, yesterday it came right there. So the yesterday low was 82.54. Standard deviation move is what? 82.47. See? It pop right back up to 84.16. So now the upside from here is 86. Yeah, you're looking for a 1, 2, 3 standard deviation move. I mean, you get lucky when you catch a two, but one is just everybody's trying to catch at least one standard deviation. For risk reward point of view, a one standard deviation move is reasonable, and it's a good probability trade. It's like you buy something trying to target a one standard deviation move and if the stock happens to make two, well, you hit a home run. But that doesn't happen as that often, you know? High beta stocks and stuff, yeah, those are different. But Tesla, oh, it's jumped here. Okay, mine, and we're gonna be done by this S&P. Let's see how many of them they buy. Okay, Apple, we already looked at them. So these are, I think I posted this one. So these are the ones that triggered a buy signal on the yesterday bar. Okay. So let's see how many of them they actually the the swing is up. All about values, one, two, and this and this. So these are the ones that triggered a buy signal here. Apple is one of them. Archer Daniels triggered on this one. So now, see, the thing is now the next target for this is always try to see if you can take out the previous swing high. And then from there, you can make a room to the upside. Baxter, Capital One. Interesting. See, 193. That would be the ideal target. See, only 2 bars and then boom. Resistance hidden here. See, initial swing low, lower high, lower low. See, yeah, it's going to be a tough one. This is where I got the rejection here. Needs a strong push. Chevron, nothing really. PayPal, this is the one I was telling yesterday last night. Yeah, you can look for this. This is doesn't stock doesn't move much. Yeah, watch PayPal on Monday. See if you could look for the high of this bar. You're supposed to have a higher bar and this swing high. So you have a resistance here, you see, at the previous swing low. Okay, right there. If this signal holds Monday, if it's happened to be an inside day for this stock, or if it managed to go up, look for 72.45, the swing high. Then what you can do, it looks like some sort of a choppy looking three-way move. If we're gonna do this, and draw a line from here to here. That's going to be a resistance that's connecting three swings off the high, this swing, lower high, and lower high. And then you just see if the price can break this high. That's your upside target right there. If the low holds. Now this low right there on the signal must hold. Like this. That's your trade. Now you risk whatever you can feel comfortable risking. So if the price closes close below this, this is no longer valid. But it does, that doesn't trigger every single time. It doesn't trigger it, There's a few good ones here. That's a good one. 14.9% upside. You always have to look at the upside, how much it went up from that bar. I think 16.7 on this one until it took another swing down. So that doesn't mean that it's going to be another 16%. But again, it just gives you a bit of a kind of call it a confidence, or because if you don't know which way the stock is going to go, we just trade the unknown. The future is not written. That's it. That's all the buy stuff. I'll get into the sell one and then this scanner. Sell, execute. Whoa, 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 whoa. 42. There's 42 stocks. I triggered a sell signal on yesterday at the close, like when the bar closes. So now we go to ooh, that's a double whammy. Adobe made it back to 400 from 331. Man, this great company. The CEO has to go. Wall Street, nothing here. This I don't know. This is Dollar Tree. Ooh, this looks like a very. This is that's a perfect ending diagonal right there. You see how its price is. This one is gonna take a dive any day. That's this. This is a very well-defined diagonal right there. See how price is compressing within this wedge pattern. eBay. Why did I do this? Yeah, don't expect me to throw 10 trades, 10 trades on everything. Yeah, you don't want to overtrade. Always try to selective trade, man. It's a risk. Costs money. Keep an eye on MasterCard. It's a pretty strong close. Very weird. Last one was it's a way long time. You see how much price went by it, this how long it took. Look at this. It's just Northern Grumman is not good. Oracle. You're looking for one, if you can, I mean, if we can catch a one down day, man, on the good stock that moves, that's it. It's your trade. Palantir already talked about it. Luck will. You see how choppy that decline is? Look, the swing does like it played out. Look at the lower bar, you see? One, two, three, four, five, six. 6 days it took to give back 4.3. Right. Man, look at this. You see that like 5% moves. There's something is not right here. This is crazy. He's getting lower bars everything every single time it hits. See, this is a lower bar. This is a lower bar. Yeah, you don't wanna like if like this bar right there, right? It triggers here. Price closes 73. Now on Monday on this stock, you have to watch this low because you need a lower bar, okay? Against this stock, against this one to hold. That's your and then from here, if it would be it would be a lower bar. So you take the previous swing low and then you take this previous swing low. So this is you're gonna act as a support, but that's your defined targets. You never know, anything can happen. You can just look at this. That's your 70. So all you have to do is just take the previous swing low. Those are your, you know, those are your very well defined targets. So what the best way, the ones are the ones it's just like it triggers and it takes out the previous swing low, like this one. Didn't happen, right? You see, it was close, but now that's how the best way to set up a trade with the risk to reward. Now, like this. Now, in this trade, if this holds, okay, my risk to reward from here is this. That's it. This is your risk to reward. You put a, let's say you use a hard stop, is going to be right at the high of this bar. This is where your entry, right where the price is at right now. And this is your reward right there, previous swing low. And now you wait. How many days it's going to take you to get there? So you risk in less than 1% to make 2.75% risk the reward. That's an excellent risk to reward ratio. Technically, you're risking one you a well-defined risk to reward is always one x. You risk 1x to make 2x's, right? There's NVIDIA, sorry, the Visa. But the trade takes time because these are daily bars. Each day, you don't know it's going to be inside bar, outside bar, whatever the case is. Okay. The point is that the high of the bar must hold for this signal to play comes into play. That's all. There, Wells Tower. Now this one is has a lot of resistance coming up. Why? Because you have a resistance here, and then you have a resistance here. Oh, geez, what's going on in most the here? So this is your upside zone. Turn this thing into a red. Okay. So this is where it is right now. So you just mark these here. This is where it is at the moment. It's going to face this resistance here, turn this into a green. Now, if the price rolls over from here with this sell signal that just triggered, our downside is this. Or we can just go back to the previous swing here. We can just make they act as a very strong support here, you see? So you draw your levels. So in this case here, your entry is here, and then your target is this. This is your risk to reward trade on this. But you can close at any time. This doesn't mean you're gonna have to wait till all the way until target the takeout the previous swing, the previous swing low. The price pushes down here, but I don't know how much the stock moves. You can close a trade anytime you want. So this is how that's I mean, if you just wanna switch signals day and night all day, that's how you hunt for one. And then you just wait it out and see if it plays out. Okay. We'll take some shots in next week or in the coming days. Because I ran a scan on 500 stocks. So then on a 500 stock, there's 42 stocks. So rest it means that what you have 458 stocks that they made it through. These are the ones that popped up on a scan. So it doesn't mean that it's going to be a 100. Again, you have to think and trade in probabilities. There's no such thing like it's going to happen. It will happen. We don't know that. Okay, we gotta go. We're gonna move around, stretch. Oh, kind of sleepy. I gotta go to the store. I gotta stop this.